Celsius stock has taken investors on a roller coaster ride in 2024. After starting the year being up more than 60%, it's now down more than 50%. So it's reversed those gains and added 50% to losses on top of reversing those gains. So what's going on with Celsius stock? That's what I'm going to answer in this video, looking at the company's latest developments to try and figure out why the stock is taking this kind of roller coaster ride in 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Celsius CEO John Fieldly said that retail sales in the quarter ended September 30th increased by 7% year over year on unit sales, an increase of 7.3%. The resilient growth at retail overcame softness in the category, which grew at 2% in the same period. In other words, the overall energy drink category grew by 2% in the same period, while Celsius grew by over 7%. So it's gaining market share in the category. However, the category experienced significant softness in the quarter. People were not as interested in buying energy drinks in the latest quarter that ended September 30th. That drove down the company's revenue to $266 million, and that was attributed to the company's partner, which is Pepsi, of course, the largest partner for Celsius, was working down inventories. So Pepsi, instead of buying more from Celsius, wanted to use its existing inventory to make those sales, to decrease the inventory, because Pepsi noticed that the category was softer, and so Pepsi did not want to go to Celsius and add more inventory, and so that led to decreasing sales for Celsius. That was the primary reason why the stock price is down by as much as it is. The company's revenue coming down meaningfully. Investors in Celsius stock were getting accustomed to the company reporting significant growth year over year for several consecutive quarters, and all of a sudden now getting hit with this headwind was a bit of a shock to Celsius stock investors. And as I highlighted earlier, you can see that slowdown starting around May of 2024, the stock price taking a huge dive downward, all the way down to being a negative 51% for the year, after it was up closer to 60% in the year if you looked at the results in late April and early May. Longer term, Celsius aims to attract new customers into the energy category. It wants to expand its product availability and increase the consumption frequency. So it wants to get new customers, and then it wants to get existing customers to drink its products more frequently. A reasonable strategy if you're a beverage company. You want more customers to try your product, more customers to drink your product. And then once you attract those new customers, you want to try and get those new customers to drink your product more frequently. I would say for Celsius, the more important part for its business right now is attracting new customers. There is so much opportunity to attract new customers right now that offsets the company's goal of increasing frequency. Once it grows more, once it attracts newer customers, then it will turn to the bigger part of the strategy, which will be increasing frequency. For now, I think it needs to attract a lot more customers. So they're going to continue to bring new consumers into the energy drink category through premium marketing and innovation around better for you and great tasting energy. And for beverage companies like Celsius, marketing, advertising becomes one of your core skills that you need to be really good at. And that's a good thing for investors, because companies that rely on marketing as a core skill typically end up generating higher returns on invested capital than businesses that rely on other factors to drive revenue, to drive profits. When you're good at marketing, you can get customers to pay premium prices for your products. Some examples include Pepsi, Coca-Cola, right? You don't have to go far to look at that. Pepsi and Coca-Cola generate very strong profit margins in their categories, and it's due to their improving and excellent marketing strategies. They're able to get higher prices for their beverages. You can go down the grocery aisle and you can see that Pepsi and Coca-Cola's products are more expensive than other brands, and they're still generating strong sales. People are willing to pay those higher prices because they like Pepsi, they like Coca-Cola, they continue to habitually drink those products, and the marketing reinforces that, right? You see a commercial for Pepsi or Coca-Cola, it makes you, when you go to the market, you have that on the top of your mind and you're more likely to purchase one of their products. And if you look outside of Pepsi, the beverage category, you can look at Nike and Apple as two companies that again are excellent in the marketing category, and that's allowed them to generate premium prices for their products. Apple's phones are more expensive than their competitors, even though the product itself is not as innovative as some of their competitors, but they're still able to generate premium prices. And it's because of the marketing. Same thing with Nike, right? And so these companies have generated excellent returns for shareholders because of their excellent marketing. Marketing allows businesses to differentiate themselves, and that differentiation is what gets customers to pay premium prices. And so this has great potential longer term for investors, that the category benefits from increasing effectiveness of marketing. That's an area that I like to be an investor of, categories, businesses that benefit from great marketing. So, in terms of expanding their product availability, based on the recent industry surveys, they expect energy will continue to gain shelf space in the beverage coolers and aisles. So that's good news, that based on what these grocery stores are seeing, they're going to give more shelf space to the energy category, because it looks like consumers are buying more of these beverages, and so they're going to include more shelf space for energy drinks in grocery stores. And that's great news. Celsius is focused on re-accelerating their market share growth, and they believe their incentive program with Pepsi will help them achieve that growth. Now, one area that investors can be very excited about for Celsius is sales to Amazon, which increased by 21% year over year to 27 million, and that was up from 22 million in the prior year period. Celsius ended Q3 with a 20% market share on Amazon, according to the last 14-week reading ending October 5th, 2024. And the reason why I say Amazon is a great category here, two reasons I'll highlight. Number one, it alleviates the concern of trying to gain shelf space at grocery stores, which have long-standing relationships with companies like Pepsi and Coca-Cola and Dr. Pepper and Sunny Delight and other beverage companies that have demonstrated that they can sell through these items. Grocery stores will be hesitant to give up that shelf space to a company like Celsius. Now, its relationship with Pepsi does help, but it still needs to fight for that shelf space on the aisle. Whereas with Amazon, it doesn't need to fight with existing relationship holders. It can grow in a new category and generate sales through Amazon without needing to fight for shelf space, which is very competitive and expensive. Another reason why is because I think beverage sales are a great thing to have online, because beverages are heavy, and having to go to the grocery store and carry all of that stuff and bring it home is inconvenient. Whereas Amazon will deliver it to your home, and these are non-perishable for the most part. And so it's a category that will benefit from delivery. So for those reasons, I think this is an exciting category. And overall, the company has excellent long-term prospects, even though the near term there's a lot of headwinds. And I think we talked about that here. The near term energy category sales struggling, but longer term, the company has great prospects. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.